It's Wednesday, the 16th of December 2020. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. Today's headlines: a big win for bank shareholders after the regulator drops rules preventing the lenders from paying much higher dividends. That's our main story. Plus, Prime Minister Scott Morrison said China was breaking free trade rules after it banned local exports of coal. The government set to spend an extra $1 billion on aged care, and retailers confident of a boom Christmas. Banks will be allowed to increase their dividend payouts, providing good news for shareholders who have struggled with lower share prices and limited payouts throughout 2020. The Prudential Regulator has dumped its restrictions on the payment of dividends, abolishing rules introduced during the COVID-19 pandemic that limited shareholder payouts to 50% of profits. The restrictions had been put in place to ensure strong capital levels among the banks to withstand the economic recession. But with the economic recovery stronger than anticipated, the Australian Prudential Regulation Authority said the onus was on boards to decide what sustainable rates of dividends were. Banks have always been relatively high dividend stocks, attracting many shareholders who live off the income stream. That includes thousands and thousands of pensioners. But all Big Four cut back or abolished dividends last reporting season, and, anecdotally at least, the reduction hurt many older Australians. The abolition of the APRA rule means banks are likely to lift payout ratios to the more normal 65 to 70% of profits, with Commonwealth Bank and National Australia Bank best placed to immediately increase dividends, according to bank analysts. Bank share prices struggled during the pandemic and were underperformers, but since the start of last month, Commonwealth Bank shares are up 21%, National Australia Bank is up 25%, and ANZ is up 22%. Westpac share price is up 11%, in keeping with the overall market. The change demonstrates that the Australian banking sector is in good health, although the Reserve Bank noted yesterday making money in a low interest rate environment is tough. They deserve a shout out for their performance during the COVID crisis, acting as shock absorbers for the economy. Their stability has held the local economy in good stead, even if their share prices suffered. Now it's time for bank shareholders to get a win. In overseas news, while Germany, Italy and the Netherlands have all announced tighter restrictions in an effort to manage COVID-19, Britain will ease the rules for 5 days over Christmas. That's despite having recorded more than 65,000 deaths, the second worst in Europe, and being in the grip of the virus. Industrial production in China increased 7% in November versus a year earlier, demonstrating the economy's need for Australia's raw materials like coal and iron ore. One of President Trump's closest allies, Attorney General William Barr, has resigned over ongoing claims of electoral fraud from Mr. Trump and an investigation into President-elect Joe Biden's son. It really is getting very messy. It came as the Electoral College formally validated Joe Biden's victory. He won the election 306 electoral votes to 232. Locally, Prime Minister Scott Morrison said a ban on Australian coal by China was a bad outcome for the trading relationship between the two countries, adding that the government was yet to be formally notified. Media reports in China said a ban had been placed on importing Australian coal. If true, it was a breach of trade obligations under the China-Australia Free Trade Deal, the PM said. The federal government will announce an extra $1 billion for aged care in tomorrow's mid-year budget statement, according to media reports. It will fund 10,000 extra home care packages for the elderly, boost the sector's COVID-19 response, and improve access to allied healthcare services, including mental health. There are signs of strength in the labour market. Remember, the government and the Reserve Bank have put a clear focus on jobs creation. Weekly payroll figures from the Bureau of Statistics show that more than 75% of jobs lost to mid-April had been regained by the end of last month. The Australian Competition and Consumer Commission has commenced proceedings against the Retail Food Group, alleging it engaged in unconscionable conduct and made false and misleading representations in its dealings with franchisees. Retail Food Group operates Michelle's Patisserie, Brumby's Bakery, Donut King and Gloria Jeans. Super funds offering choice products that are normally recommended by financial advisors must prove the products serve the interest of customers. The government and regulators want to clamp down on high-fee, poorly performing funds in the $900 billion choice sector of the superannuation market. Fair enough. And retailers are increasingly optimistic about Christmas, hoping that consumers that have been forced to stay home will spend more in shops. Deloitte's annual Retailers Christmas survey showed that 2 in 5 retailers expected sales to increase this Christmas by more than 5% compared to last year. But 1/4 thinks sales will be more than 5% lower. The other big story from the survey is the expectation that people will spend much more online. That's the Fear and Greed business headlines for today. There's more on all of these stories in today's full Fear and Greed podcast, as well as an interview with Dr. Rob Newman, Chief Executive Officer of aerial mapping company Nearmap. I'm Sean Aylmer. Enjoy your day.